Hello everyone, June 10th, 2022. This is the weekly market summary. So basically what we're seeing today is a really bad CPI number. Year over year is 8.6% inflation. It's even worse than the April 18 release data. Back to that day, we had worse inflation, 8.3% year over year, back to April 18. And if you remember the slaughtering, so on April 18th, the CPI number came out. The market initially go off for 2 days, and then just pretty much a downside channel all the way to the year low to 380. So yeah, we'll see if that's gonna happen next week. And really hard to see the numbers. Buyers are coming right now to support the market. Looking at that CPI number. However, if we start to see crude oil, which is right now the biggest factor for the inflation, because now we see used car price start to drop, shipping congestion start to ease. Right now the biggest problem is crude oil. Since May, it actually got up from about 102 per barrel to 120. So that's about 17% upside, right? And crude oil has a halo effect, directly and indirectly control 30 to 40% of the inflation. So if this crude oil really can start to drop, which kind of in dilemma right now, right? There's really no way to increase the supply while to curb the demand. Unless the economy really start to slow down worldwide, then yeah, the crude oil demand start to drop, and then the crude oil price will start to drop, and so the CPI. And when the CPI numbers start to drop, Fed will be less hawkish. Money liquidity started coming to the market. We could start to see some support. But yeah, right now, if we don't see that between now to the next CPI number, I think the market is pretty bearish. And right now we're using fix to betting on the downside momentum, which we had a pretty successful swing trading on both SQQQ straddle, which is about 400%, and fix next week expiration is 150%. Since we actually got some warning from White House and CPI numbers are going to be pretty bad today, and also we have some in-house models suggest the CPI number is going to be around 8.5 to 9%. So yeah, glad we take out the swing trading on the long side and start to betting on the downside with some fixed call and SQQQ call. And in the meantime, we also have TQQQ straddle as well. And I take the bounce this morning to take out the China name swing, and also stop out Shopify. China name actually today is gapping up on the news. Chinese government has some favorable action at opening, but now skip it up again. Bao now back to red. Watch the market flashing to the close. So yeah, right now SPY is breaking this consolidation range for a day EMA cross to the downside. Now we're starting to enter this choppy zone. So next week, if we don't see a momentum downside, breaking this year low at 380.5, we're probably going to see a lot of choppiness around here between 390 and 380, which is what we see back to the end of mid-May, the end of May to mid-May. Just a lot of choppiness and just making swing trading really difficult. So this day trading. Looking at fixed right now is breaking this daily downtrend, flagging to the upside for a day EMA cross. And the one thing I don't like is we have a reverse hammer candle. Usually fixed showing this reverse hammer, usually it means it start to pull back. So just give you some random example here, right? Reverse hammer, then next few days start to pull back. But right now looking at the fundamental economy and everything and QQQ and SPY chart, yeah, I think fixed probably have more upside momentum. Today got rejected at the $30 upside resistance. Rejected, pulling back, cannot hold this EMA support, but for a day EMA cross, we might see more momentum, so we'll see. Yeah, same thing with NASDAQ, QQQ, very similar chart. Right now, 4-day EMA cross to the downside, ready to test year low as well. We might see more momentum on the QQQ downside, since actually financials, industrial are holding out relatively well compared to NASDAQ. And when TNX is spiking up, Usually that means a lot of damage to the tech sector, so we're seeing more weakness on tech than any other sector. So speaking of 10-year yield, right now it doesn't look very good. Flagging to the upside, breaking the year high today, up 4%. Looks like we said, it's probably going to head to 35 sometime in the next 2 to 3 weeks. The other very concerning factor, which usually is a very important metric for a recession, is the yield curve inverse. So usually you'll see that a longer dated yield has a higher interest rate. Here, the 10-year yield should be higher than 5-year yield, FVX. But right now, the 5-year yield and 2-year yields are actually higher than 10-year yield. So that means the yield curve are reversed, and usually that's a strong signal of upcoming economy recession. So that's definitely another red flag, but it doesn't necessarily mean if we see a yield curve reverse or inverse, we're going to see a recession. We have to look at many numbers together, including unemployment rate, which is still pretty low right now. Market flushing to the close, semiconductor and Tesla selling off. Probably going to add more fix on the June 22nd. Let's take a look at some other sectors. Before we do that, I'm posting the trading news channel. Looking at the flow of gold. This is the SPY versus put versus call sweep today. You're probably gonna see very well, but this is 54 million to 4 million put to call side. And also, if you look at yesterday, we have 80 million put versus 7 million call. So those are another bearish factor that the option market is betting further downside to the market. I was gonna say, so if you look at this, and also there are a lot of dark pools sold on the SPY too, so we're probably gonna see more momentum downside. Market unbalanced MOC 2 billion on the sales side. So the weakest sector right now is actually real estate, breaking a year low. I was thinking about to short this guy too. I'll take a look. So energy, a lot of put, but the risk reward is not very good, and also crude oil still holding up. And XLE started watch the 40-day EMA cross to the downside. Financials right now selling up because the fear of the economy is going to pull back, but the economy is doing okay and yields are going up. Banks are actually going to make more money. So this is a sector that I do not want to short at the moment. Let's take a look at industrial. Right now, this sector is holding up relatively well too compared to tech, but of course, 40-day EMA cross, pretty much all the sectors are like that, ready to break down. The last three sectors we're going to go through. Biotech also breaking year low for a week. While some names like Merck, Eli Lilly, Pfizer are relatively strong, but a lot of pharmaceutical names are pretty heavy right now. This consumer staple is the only one that pretty much hold out, with some of the names are actually green today. Right now it's down 0.04%. At one point it was green. So this sector we'll see. Usually is the money like to go to in the downturn. So might see some upside momentum on the sector here, like Coca-Cola, Pepsi, Walmart, which Walmart is green today by the way. Very rare. Right, so watch this guy closely. What is the other sector I was going to mention? Material. So yeah, when the U.S. imports start to decrease, yeah, material will sell off as well, as the same as economy slow down. So pretty heavy. Utility is holding out relatively well. Usually this is a sector, the last sector to sell off. So yeah, I mean, but not a long setup too, but not a very good short candidate as well. Yeah, real estate is slowing down, that's for sure. We can tell from the DocuSign earning yesterday, as most of their business is coming from real estate closing. Right now they still maintain their guidance, so the stock price is holding up. I'm I need to do some research this weekend whether this is a good opportunity to short. And they have a pretty solid cash flow, so I'm a little concerned. I see a pretty large size later this year expiration DocuSign 1.5 million put sweep earlier. Very expensive. I think they paid like $12 per contract, something like that. But yeah, I think probably one of the more straightforward way is just to short this XLRE, as real estate transactions slowing down quite a bit. And if you look at a lot of numbers, whoa, SPY. Yeah, if you look at Apple, Amazon, Facebook, FANG, pretty much all bear flagging right now. We talk about the options, right? Like everybody's betting Apple is not going to reclaim 140 next week. Facebook kind of flat since it has been sold out pretty heavily. Sorry, it's Meta now. But yeah, still in this range bound. Probably gonna break year low if QQQ is gonna break year low. Amazon can be a good shorting opportunity since the contracts are relatively cheap right now. I looked at the receipt war earlier. It's very expensive, so I didn't do anything. Oops, my computer just freeze. Fingers will always take a lot of RAMs before closing. Google breaking this uptrend, right? Very similar to SPY QQQ chart. This one might be holding up relatively well. The year low to around 2000 might hold pretty well. Stock splitting coming up in July, but not so lucky on Netflix and Nvidia. Right, Netflix has been selling out pretty hard. Now has a little uptrend, but not breaking down all the EMA support and uptrend channel as well. Watch the chip demand start to ease, and so does the semiconductor. This is another sector that could be a good short as well. Yeah, but when the chip shortage start to ease, we're actually going to see a lot of automaker names start to hold up, and that's why we're seeing on Tesla has a lot of resistance today around 700. Yeah, that's definitely something to keep in mind. And when the chip shortage start to come down, the car production come out, that means the used car price will collapse, and that will help the inflation quite a bit as well to go down from here. So kind of high level what happened to the market. Again, I'm going to add fix, but I'm going to start the recording now. Pretty nice week on the swing trading. Day trading kind of except the huge Baba hit. But yeah, hopefully you guys also make decent money and not being damaged too badly on your portfolio on this market downturn. We have done a lot of good trades and hedging, so hopefully that helps. Thanks for joining, guys, and I will stop the recording now.